The Bank of Korea is maintaining its benchmark interest rate at 2.5% for the fourth policy session in a row amid concerns over currency volatility and financial stability. Our correspondent Moon Ji-young reports.
The Bank of Korea has once again held its key interest rate at 2.5%, continuing with its easing cycle pause for a fourth straight meeting amid rising concerns over currency volatility and financial stability risks. This decision follows the final Monetary Policy Committee meeting of the year on Thursday.
Although inflation has inched higher and uncertainty over the growth outlook persists, consumption and exports continue to improve, and financial stability risks remain. Given these conditions, we judge that maintaining the current policy rate while closely assessing domestic and external developments is appropriate.
The move comes as the Korean won has slipped into the upper 1,400 won range against the dollar, a 7-month low. Officials say a rate cut could add pressure to the currency amid uncertainty about U.S. monetary policy and strong dollar demand from overseas investment. Household debt and house prices, especially in the Seoul metropolitan area, also remain key concerns. On the same day, the central bank also released its updated economic outlook. It now expects the economy to grow 1% this year and 1.8% next year, slightly higher than its August forecast.
We expect exports and facilitated investment to grow more than initially forecast, largely due to the conclusion of the Korea-U.S. trade negotiations and a strong global semiconductor market. On the consumption side as well, expansionary fiscal policy and improving economic sentiment are expected to accelerate the pace of recovery.
Even so, the bank cautions that uncertainty remains, particularly regarding the global trade environment and the speed of the semiconductor recovery. Inflation is now projected at 2.1% for both this year and next year, reflecting the weaker won and a modest pickup in domestic demand. The bank expects inflation to stay above its 2% target for now, with the outlook hinging largely on exchange rate movements and global energy prices. The Korea-U.S. key rate gap currently stands at 1.5%. With the U.S. Federal Reserve meeting next month, markets are watching closely for any shift in U.S. rate policy. The Bank of Korea is maintaining a cautious stance, and while rate cuts remain on the table, any further move will depend on growth, inflation, and financial stability in the coming months. Moon Ji-young, Arirang News.